Welcome back to the Undervalued Investor YouTube channel, where today we're talking about the aftermath that comes in the wave of the Bitcoin spot ETF. We're going to talk about the ecosystem and some just facts that are very interesting around Bitcoin as it stands today. And if that is a conversation you'd appreciate, damn it, as always, hit that like button, because yes, this spot Bitcoin ETF is here, and it came with a lackluster blow up than I think a lot of investors were anticipating, because a lot of people were loading their wallets up expecting a much more bigger boom than there was. And I think the microcosm that exists in the US is largely over dramatized. There's been Bitcoin ETFs that exist in Canada and Europe that even US citizens had access to. And I think this is what people thought would be an institutional way of buying Bitcoin in a safer, more traditional manner that starts disconnecting it from the original use cases of Bitcoin being a decentralized asset. As it becomes more and more centralized, there's some concern around that ecosystem, right? But I think it's just very intriguing at how people got super hyped up into this, and the Bitcoin price has been rallying pretty extensively for the last year. And I don't think any of this really has any consideration, maybe a little bit when it comes to the institutions that have been buying it to build up the anticipation of the ETF. But realistically, I don't think a lot of this trading volume, considering it's a total global asset, has necessarily to do with just the spot Bitcoin ETF. We do have the halving event that's going to be coming up this year. We'll see how much that can play into the price. But the real question comes into the ecosystem of, when's the next leg up? This is a massive asset. It's trading for damn near $1 trillion. It's one of the largest global assets that currently exist. But the question is what is this asset? I don't think that has been truly defined just yet. I mean, when we look at it as as real estate, as we look at it maybe like it's gold, that's what a lot of people are discussing Bitcoin being, as a traditional holding asset, instead of what the traditional and original use case was, which was basically a trading asset, moving money globally. There's Bitcoin Cash, but most people are just holding it. I mean, 69% of the wallets that hold Bitcoin aren't moving it. They're not trading it. They're not doing anything with it, which, kind of takes away a lot of the Bitcoin that is circulating on the market and can help drive a lot of this price action that we're currently seeing to the upside. But the other concerning thing that's very interesting as well is that apparently there are only 1% of Bitcoin addresses that hold over 90% of the total Bitcoin supply, which means these are the whales that are largely discussed in the market. And we've seen them. We know some of them out there, the Michael Saylors of the world. But the thing you have to be concerned with as well is if these people decide to take profits at any point, they have a huge leverage in how Bitcoin trades. I mean, that's what we saw through the price drop that happened here. Like, this wasn't traditional retail that was crashing the price of Bitcoin from the peaks that it experienced. It was largely whales that were likely trading in and out of these massive wallet supplies, right? Which was also very intriguing. So I think the ecosystem around Bitcoin isn't going to trade to the upside at the extent that it has in the past. That is just the law of large numbers. When you get up to these trillion-dollar price targets like Apple, like Microsoft, it becomes harder and harder to double up again and again without massive amounts of institutional and retail involvement. In fact, I don't even think you can see stock prices trading at the levels they trade at without institutional involvement, because institutions at this point make up the vast majority of the trading volume in the market, in my opinion, right? So I'm very intrigued to see what's going to happen with Bitcoin here. But if you are a foreign investor, I think this was just largely overhyped. Obviously, the trading volume has been absolutely bananas. I imagine a lot of this could be everything from shorting to options trading to all kinds of stuff. I don't think this is traditional just buy and hold investors. But yeah, there's been a lot of attention around this Bitcoin ETF, right? So it's just something to pay attention to. But if you live in Canada, I mean, even if you were a US citizen, you could have bought the Evolve Bitcoin ETF. This one's been around for a little while. There's ARC versions. You could just buy into things like Michael Saylor's stock, and you get kind of the same exposure to some extent. But the EBIT ETF is a little bit more to a one-to-one Bitcoin kind of ratio here, where you buy this as a share and you're getting a direct exposure to a certain amount of Bitcoin. And again, I wouldn't traditionally focus on this, because I do believe that Bitcoin is supposed to be a decentralized asset, and you kind of remove the whole asset class when you start holding it in an ETF. If you do not hold your keys, I really don't believe there's a point to buying Bitcoin. It completely defeats the purpose of the asset class. And that's just my opinion. And again, there's risk with holding your keys. You can lose your key phrases. I mean, there's hacks that go on. If you're an idiot, you could, somebody could come across that key phrase. So there's obviously a lot of concern with it. But that's no difference than storing gold. I mean, what's the point of buying gold and holding on to it if you're just going to put it in a bank? The whole point is to hold gold as a physical, decentralized way of getting away from the traditional financial system, right? But if we're going to look at gold the same way we look at Bitcoin, then it's going to trade more, I guess, like a commodity. And then there's the concerns of the cyclicality of that and kind of what it means for the assets going to be very intriguing moving forward. But still, nonetheless, obviously, Bitcoin has a limited supply, whereas gold can endlessly be found in the ground or in space. And I think gold is just one of those things that's largely manipulated, where Bitcoin might have a harder degree of being manipulated outside of the whales that hold the wallet. So they're very intriguing conversation to be had. But I do want to point out that if you're one of those doomsday outlookers saying that the US dollar has been overinflated and it's going to come to an end, I implore you to even take a look at the US dollar and remind you how wrong all the gold bugs have been since the 90s and the 80s and the 70s. This story has gone on by the Peter Schiffs of the world for eons, and I don't think it's going to change anytime soon. But the fact of the matter is even with all the dollars that have been printed since the pandemic and this massive amount of inflation that was caused by it, the value of the US dollar on a global standpoint remains to be unbelievably strong. Actually, the dollar is so strong right now, it's seeing levels that it hasn't really seen since the early 2000s. That just shows that the global supply of US dollars is continuing to prove dominant. And for as long as that remains the case, holding US dollars is not a bad thing. I mean, you're getting incredible global purchasing power just by holding the currency. And if you're buying US dollars as a foreign investor since 2010, your rate of return has actually been insane. And to put it in perspective, let's say you were a Canadian, you can look at something as simple as the S&P 500 on a converted currency level with VFV, which gives you the exposure to the S&P 500, but already converting it to CAD. And we can see if you look at like a 5-year price chart on this, it is up 81% and comparable to something like VOO, which over the last 5 years is actually only up 78%. Excluding the dividends and the currency conversion on those dividends, there is a price discrepancy here just because of the dollar difference, right? Because I mean, the S&P on the US side and US dollars only just peaked an all-time high, whereas in the Canadian converted aspect in the last year, it's up 5 extra percentage points. So keep in mind, a lot of this stuff comes into play. It's a very complicated conversation, but don't get caught up on the doomsdayer aspect of things. And remember, Bitcoin is a very speculative asset and it comes with extreme volatility that can, though lead to outsized performance and gains, can also lead to absurd outsized losses and lack of returns. And the outlook is never guaranteed into the future, as we've seen with many industries out there. So just keep that in mind. But I'll pass the question off to you. I'd love to know what you think in that comment section below.